Meanwhile, shares of Boot Barn are up about 2% today, despite initially dropping 4% pre-market as Spruce Point Capital released its short report on the stock. They actually see 40 to 50% downside risk in the company. In the report, they point to concerns about management credibility, viability of the company's strategy, accuracy of its financial reporting, and its share price sustainability. We have reached out to Boot Barn for a response. If we get one, we'll bring it to you as soon as we can. But joining us in the meantime is the man behind the call, Spruce Point Capital founder and chief investment officer, Ben Axler. It's good to see you again. Welcome.
Good to see you.
Such an you were joking earlier about you shorting stocks in a bull market and also going after companies and calling out people in particular is always a difficult business. And in this case, you think there are legitimate concerns that should be raised about what's going on here.
That's right. So we have problems with the business strategy and model. This is a specialty retailer that focuses on Western wear and is making a national movement. And in that process, we think that the store economics are declining. We think that they've alienated their core customer, which is traditionally a male farm worker, cowboy. Now they're taking on much more fashion risk. Moving into geographies where there just is less demand for Western wear. So here in New Jersey, in Cherry Hill, for example, there's one near Ross stores. They cater to a more, value treasure hunting female customer. That's not their core customer. And as a result, inventory is piling up, same-store sales are declining, unit economics are declining, and the stock price is up 40% on some belief that a turnaround is going to happen. We don't think so.
Now, Ben, a lot of this may have to do with some of these overarching trends that we are seeing in pop culture right now. I think about Beyonce. I think about her new album out. That's kind of more of a country western themed approach to things and how they could be bringing more people into that particular fold. What exactly does that mean for a company like Boot Barn? And maybe this is something where management's saying this is a strategy. We are going to take pop culture and this move towards that kind of Yellowstone kind of feel and go right after those folks over there who are on the fringe.
Right. So, yes, I think Western, to a degree, ebbs and flows. Right now, we're seeing a little bit of an uplift because of Taylor Swift. We think that may have helped them a little bit last year, which is going to create a comp issue, going forward. Then you have the Beyonce and the Texas Hold'em. That, we think, they're off trend. They missed. So they don't have a firm partnership with Beyonce. If you look at the website and the product assortment, it doesn't match what Beyonce's wearing. So we think the market's gotten a little ahead of itself in terms of the Beyonce issue. And the Yellowknife series, that's going to be winding down, and so that's going to be an issue. But ultimately, the problem here for Boot Barn is you can get boots anywhere. You can get it online, on Amazon. There's companies like Tractor Supply, where if you're a worker, you can buy boots there.
Direct from Tecovas.
Direct from Tecovas. And we don't think they have any natural advantage. In fact, we think their marketing is pretty behind par. And so ultimately, this is a company that sells boots, accessories, commodity-type products with very little edge, very little advantage.
The stock's up 35% this year. It's priced at 104. What do you think the price should be? And what are, so the people who love it must think, hey, this is going to be the next, TJ Maxx or whatever. And you think it could be more like the next what?
Well, it could be a zero, right? I mean, retail, especially ones that overstep their boundaries, have proven to be problematic, particularly Boot Barn. Their stores are large format, 10,000 to 14,000 square feet. Go in there, look at the assortment. The shelves are stocked. We think the inventory is piling up. They just announced a 60% discounting strategy on Sunday. So they're having problems moving the inventory. And if that inventory can't move, they're going to have to mark it down, which is going to hurt margins and ultimately bottom line.